Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's the managing director on Nasdaq's market intelligence desk. Chris, as always, thanks for wrapping up the week with me. It's been quite a trading session today. Stocks react to China tariffs, to Jackson Hole, to Trump, back to Trump again. Interesting session, to say the least.
It's a punching bag out there, isn't it?
Oh, sure is.
Trump's got his two favorite punching bags out there, China and the Fed, and he is throwing uppercut after uppercut back and forth. And we got another one coming some point this afternoon to see what he's actually going to retaliate with. So it all kicked off this morning. Actually, all week, we've been talking about the Fed, all eyes on Jackson Hole, especially the initial comments from Powell, seeing what he's going to say, and essentially trying to gauge what the Fed is looking at for the next September meeting.
Right, and markets reacted positively
Absolutely.
to that. We opened down, obviously, on the
on the China retaliatory tariffs.
Powell comes out at 10 o'clock, and you can see that immediate reaction.
Dow popped positive, right? So he hit it right down the middle of the park. You know, he said, you know, inflation is unexpectedly a little bit better than we are, and we're doing with our mandates. We're doing great. Unemployment is at an all-time low. You know, and with that, you have really a sentiment that things are okay from a U.S. standpoint. And then he also interpreted and made recognition of the glowing global economy, and that is weighing on us. So again, addressing the issues, saying that we are aware of the issues and keeping our eye on the issues are what investors want to hear, because then they can act appropriately. And the problem with that is not what the president wants. The president wants a cut. He's out there beating them up left and right. And if it wasn't for the macro headlines, the president's comments probably could have been ignored and the market would probably be up today.
Right, but I think even more concerning is you have Trump tweeting out that he's ordering American companies to stop doing business with China. Now, whether you agree with that or not is not the bigger picture.
Right.
We're a capitalistic country. You can't order companies to do stuff.
It's a snap reaction to what was known to be happening. China told us that they're going to retaliate. And again, they said the $75 billion in tariffs are going to be in two tranches, September 1st and December 15th, which aligns with when we are putting our tariffs on. Again, they still said we're still going to be talking. So again, it's just a political posturing here with a little bit more oomph behind it. But what happened there is that the president took it, the other way, and instead of just taking it for what it is, he had to react. Ordering the companies to come home. I mean, the exact
Calling
tweet
Powell
was
the enemy of the people.
I mean, the quote was, "Our great American companies are hereby ordered to immediately start looking for alternatives to China, including bringing your companies home and making your products in the USA." That's pretty clear. Again, as clear as mud. So I've got, the markets are down at the lows. Trading volume is over 40% higher than yesterday. Yesterday was the lowest trading volume today. One of the lowest traded days of the year for a full session. It was the third lowest at like 5.7 billion on consolidated tape. We're well above that. The VIX has a 22 handle, a 20 handle. And with that, you're coming into a slow news cycle for next week. Until today.
Don't jinx that. Let's take a look at our first chart. This is the S&P 500 weekly.
The S&P is getting beat up on, it's taking on the chin, just like all the other major indexes. I think we're down close to 2.5% in it today. But this is a 5-year weekly that I pulled up today. We talk about the S&P because it's a good barometer of the health of the U.S. stock market. And what you're looking at here on the large cap names is that, yes, the index has pulled back slightly, and we are testing support on the 50-day at 2804. But what you're looking at here is it going to hold here, or we're going to continue higher? And on a longer-term picture, this chart still looks very, very good. Today's news could be undone with a very positive tweet in 2 weeks once China starts and the U.S. start talking trades or anything else over the next week. Remember, we have the G7 this week. That's not even getting any play. Granted, there's a lot of political posturing there. Italy's government's an issue. Angela Merkel's lost a little bit of her cred. Brexit from England. But still, the president's going to be there with the 7 largest economies. Something come out of that there that could turn this and pivot it back up north. This chart looks good. The S&P looks healthy. Yes, it's pulled back, but it's pulled back on macro headlines. The fundamentals are still relatively okay.
All right, let's take a look at our next chart because, of course, what's happening here and within the markets, it's going to impact the U.S. dollar, and this has been a thorn in the side of President Trump as well.
Right. So a rallying dollar is really tough on the trade, tough on what Trump's looking to do. Brian put this together. There's a little bit more commentary on it than note today, but it goes to the overarching theme. It ties directly to U.S. Treasuries. It ties directly to the currency devaluation with the yuan a couple of weeks ago when they pegged it to 7 yuan to 1 U.S. And what you're looking at here is a strengthening U.S. dollar. Now, the dollar's been on a significant bull run for a very long time. Weak dollar is good for the U.S. on exports and not so much for the imports here. So this could reverse here for a lot of people. But what you're looking at is long-term support, long-term resistance at 98.32 on the basket. And here it's failing. Does that signal a lower move in the dollar? That could play very strongly into Trump's hand right here, especially walking into tariff negotiations next month, if it even happens.
All right, Chris. As always, thanks so much for wrapping up the week with me.
Jill, have a very happy
vacation.
vacation.
Thank you so much. Oh, I will.
Well deserved.
I will. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter.